Well, thank you for joining us on the Market Day Report on a Monday. I'm Marlon Bowling with you. Glad to have you along with us here on RFD TV and Rural Radio, channel 147 on Sirius XM. Now, we're going to take a close look at the markets to see how they're opening up here on a Monday. Now, you do have to keep in mind that this is going to be pre-report positioning that's taking place because we get some big government reports coming up at 11 o'clock this morning, Central Time. Here to talk about it, we have Dewey Strickler on the line. Let's go to the phones right now. Dewey hails from Franklin, Kentucky, and he has a company called AgWatch Market Advisors. And Dewey, thanks for joining us here as we get ready for this report. How much impact do you think that's going to have on the trade today?
Well, it'll have obviously a little bit of impact. Trade, I think, has been looking for somewhat of a positive reaction to the report. At least this is what the shorter-term patterns look like. So we might see, the market get just a little bit of bump higher out of it, and then it'll be more or less buy the rumor, sell the fact.
Okay, let's take a look at the prices. Let's go to the corn first here, Dewey, and see how it's performing. It was just a little softer overnight. Well, as we open things up in the daytime session, we're just ever so slightly higher heading into that report. Right now, December is trading 3/4 higher at 341 3/4. We have the March up a half at 352 so far on the day. Now, this corn market has had quite a journey here as we get to the point today for that report. It has bounced off of its recent lows a little bit, but it seems like it is getting into full swing harvest pressure, don't you think?
Yeah, I think it is. I've been looking for the corn to have a little bit of a bounce up to about the 348 level basis of these contract. I don't know that when the report comes out we'll get that kind of a move up here, but we've been up here, several days in a row. I think as soon as the report comes out, you're going to start seeing prices back off.
Okay, well, let's check in on the soybeans and see what they're doing so far. On the soybean trade on the futures, here we go. We go to live quotes in Chicago. November new crop down 3/4 of a cent at 979.5. Doesn't get much quieter than that. However, that is at the upper end of the trading range. If you go back to include the overnight trade, we're one tick off of our high now. And January soybeans are down a penny. They are at 983 1/4 so far, and that happens to be on the high of the overnight and early morning trade so far. As we take a look at the soybean chart here, like in the corn, they have had a bit of a bounce here in the recent couple of weeks. But Dewey, this bounce that we have seen, has it run its course, do you think, for the time being or not?
I don't know that it has. Been looking for the November contract to go up to about 992 before we see any kind of a setback here in the market, and we may get a little bit of help here with the report. If we do, the market gets up into that area, I do look for it to see a fairly decent little break.
Now, on the wheat trade, let's take a look at what's going on in the Chicago wheat and Kansas City and Minneapolis. In Chicago right now, we have December wheat now 3.5 higher all of a sudden at 407. That's 7 cents off our overnight low. We are 3 cents from our high. In the Kansas City market, we have December now trading a last trade of 420 1/4. That would be up 1 3/4. In the Minneapolis trade, we have December there currently trading 2.5 higher at 496 1/2. In the cotton market, we'll take a peek there. The December contract, the new crop month, is down 59 points, and it is trading at 68.49 so far today. That is about 60 points off of its earlier high if you include the overnight trade. We're only 8 points from our low. Dewey, I want to bring you back here in just a moment. We'll analyze what took place in that livestock trade on Friday. That should be interesting. We'll talk about that when we come back. Well, we're back talking with Dewey Strickler. He's with AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, over the weekend, I was watching the value of the U.S. dollar overnight. It was a little bit softer, but it has been trading on both sides of unchanged. Let's see what the current status is. On the dollar index, here's a look at September, which is now up 80 points. We have December up 80 points as well. So December is now quoted at 95.300. The crude oil market, when I came into work this morning, it was down about 90 cents on West Texas crude. Right now it's down 71 cents on the October contract. So the last trade is 45.17. Does that have any impact, do you think, at all on the soy oil and the ethanol, aka corn market here this morning?
Well, I don't know if it's having a great deal of impact. I think you're looking at the crude oil is really following more the financial markets than anything else. It seems like, that the grains have gotten a little bit away from following the crude oil here. It doesn't seem to be quite as much of a market mover as it once was, but I'm sure that when we get into the fall and winter months, we don't have anything else to trade. They're certainly going to be looking at the crude oil movement again.
Okay, I have to get your opinion on the live cattle trade that occurred Friday afternoon. We had cash cattle markets that were very weak compared to the previous couple of weeks. The dress basis trade was only 162 to 170, and then we had live cattle closing on October limit up on Friday afternoon. But we had a wholesale beef trade that was sharply lower. Right now, your live cattle on October are trading 75 higher at 105.15. December is 30 higher at 105.70 on the day. February currently 23 points higher at 105.78. Looking at a live cattle chart, that thing has been fairly wild here lately, but boy, it had a steep decline the previous couple of months, but it had a significant bounce here just in the last recent week or two. Where do we stand now after that big rally that we had Friday in the futures?
I think we're going to eventually work up here until about the 109 to 110 range on the cattle. We gapped a little bit higher this morning. We're still holding the gap in the October contract. I think when you look over here short term, though, we could probably see the cattle maybe back off a little bit. Should find a little support around 103 or 102.50.
Okay, let's look at the feeder cattle trade, see how we're opening up here this morning on the futures trade at least. Friday, we were over $2 higher in the contracts, and right now September feeders are down 2 pennies at 134.20. October is up a dime at 131.38. November up just 2 cents at 128.70. Couldn't be much quieter. Lean hog trade, if we flip over there, now we had significant losses of over $1.50 on Friday afternoon. Right now we're mixed. October up 7 at 59.30. December down 27 at 53.65. That's $1 off of our earlier high. And in that lean hog futures trade, that has been kind of a wild ride in recent weeks as well. Just real quickly, we'll take a look at that chart here for our viewers at home. You can tell that that market has been chopping around ever since probably the first part of July there. And that was following a very steep decline for about 2 months before that. So we'll keep an eye on that. It seems like it's kind of in a sideways mode right now. Dewey, I thank you so much for checking in with us. I appreciate that, and I hope you have a good trading day, sir.
All right, thanks a lot.
Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. We'll be back talking more about the markets, Janet, as we get toward the government reports at 11 o'clock today, Central.
All right. Thank you very much, Marlon.
You bet.